Welcome back. Hope you're having a good morning. Let's get straight to our first corporate that we have on the show for you. Jammu and Kashmir Bank. Well, that's the first corporate. The net interest margins expanded. The asset quality was well improved in the past quarter. But what's the way ahead? Mr. Baldev Prakash, the MD and CEO at the bank, joins us on the show. Hi, Mr. Prakash. Good morning, and thanks so much for joining in. Well, let's knock off a couple of basic numbers first. What's the loan growth momentum you're working with for this year and next, if you could tell us that? And also, your NIMs are holding above 4%. Do you think it can continue to hold because liability cost of borrowing has been moving up?
Yeah. Good morning, Nigel. So the growth story of the bank is continuing and intact. And as far as credit growth is concerned, we have registered a growth of around 18%. And going forward also, we are confident that it will be around 15 to 18%. We will definitely maintain it, because generally in the second half of the year, the growth momentum increases. As far as NIM is concerned, though our guidance was around 3.75% to 4%, but we have been maintaining this 4 plus. Last quarter also we had around 3.98, and this quarter also 4%. So I'm very sure that we will be definitely maintaining our NIM within the guidance which we have already given.
Okay, so 3.75 to 4% is the guidance that you've given. So you'll definitely maintain it at that level, given that you've surpassed 4% in the recent past. Mr. Prakash, good morning and thanks for joining in. So that's on growth and net interest margins, right? I want to ask you about why the board decided to defer the fundraising plan. I mean, what was the reason for that? And how much funds were you seeking from the board in the first place?
Sonia, actually, we had an approval of 750 crores in CET1, that equity capital. That is already there. That approval is already there. We wanted to increase the amount, but I think the board has taken a view that let us first go ahead with the 750 crore where the approval is already there. So as far as Tier 2 is concerned, that is 1,000 crore. That approval is also there. So as of now, 750, that is CET1, and 1,000 for Tier 2. That approvals are already in place and we are going ahead with that.
Okay, so you're going ahead with 750 crores CET1 and Tier 2 approval of 1,000 crores. What is the reason? Why do you need a capital at this juncture? If you can tell us what the plan is over the next 1 to 2 years.
Yeah, Sonia, basically this will be a growth capital, and we want to ensure that our CRAR remains above 16% and CET1 around 13%. That is the target. And that will help us in the growth also, as well as in improving the rating of the bank also.
Okay, got that. Mr. Baldev, good morning. Could you talk to us a little bit about asset quality? Have most of the stress pools, etc., been identified and are being addressed now? What is the outlook on the same?
Yeah, Prashant, assets quality is the biggest success story of the bank. If you see in the last 1 year, we have started the journey from more than 8.67%. We ended at 6.04%. And this year, already we are at 5.26%. And our guidance is 4.5%. I'm very sure that we will be definitely achieving that guidance, number one. Number two, if you see the slippages also, hardly any slippages are happening. We have a slippage ratio of less than 1.25% during this year. And that means that whatever the stress was there in the book is no more now, and we have already cleaned our book. And I'm sure that net NPA also, after a long time, you see we are around 1%, and by the end of this year, net NPA will also go below 1%.
Okay. FY24 end net NPA under 5%. Got that.
Yes.
So last time, when you joined us, you told us back in July, you told us that housing loans is essentially what is driving things in a very big way for you. I think there, growth was running at about 20%. You said, that can be 25% or even more. What has happened the quarter, and what are you seeing out there in that segment?
Yes, Prashant, I think the same story is happening this quarter also. I think the credit goes to the improved law and order situation in our home territory of Jammu and Kashmir. Lot of investment the normal public is making in the housing. The repairs and the renovations also is happening, and that is driving the overall housing loan growth. Besides, we have an ambitious plan of expansion in the rest of the country. Around 17-18 branches we are opening in the rest of the country. Those branches will also supporting our home loan growth besides our liability franchise.
Okay, all right. Mr. Prakash, just to clarify, the gross NPAs, they come down to 4.5% by the end of this fiscal, and net NPAs come down to around 1%. They hold around 1% by the end of this fiscal itself. That's March 2024, right?
Yes, that's correct. Nigel.
Got it. Okay, all right. And you said the CET1, post the 750 crores goes to around 13%. That's the goal. I think one query that the street has is that the CET1 ratio is low in comparison to our peers. So that 750 crores, it increases it by what? 90 basis points or 100 basis points? What is it?
So we have around 300 crore, 336 crore, which is not yet accounted. That is on account of ESPS shares also. So overall, if we see, it will be more than 1,000 crores. That 336 plus 750 crores. So in percentage, I think we will be definitely reaching to 13%.
13%. All right, got that. And you told us a little bit about asset quality as well. Can you tell us what is the outlook as far as slippages is concerned? What is the expectation on slippages for the rest of the year? And what does it compare to on an average recently?
So, Sonia, slippages are less than 1.25% during this half year. And we are not seeing any much slippages. No lumpy, no big accounts are there where we are finding stress. So we will be maintaining this slippage ratio around 1.25% during this year.
1 to 1.25% of slippages during this year. All right, got that. Thanks a lot, sir, for joining in. It was indeed a very insightful conversation with you. That's J&K Bank. Very positive, actually. 18% growth target is what they have achieved, and they'll definitely maintain 15 to 18% going ahead. And the net interest margin guidance of 4% will also be maintained. That's a bank that has done phenomenally well. I mean, I think in the last, there you have it, 12 months, it's up 200%.